Hello guys, Tina here. Good morning, good afternoon, good evening, depending on where you are seeing this video from. So today we are going to be talking about order flow. Guys, I'm kind of excited because I feel like we're making progress on this advanced playlist. I'm hoping to catch up with where we stopped at the beginners playlist. Then we'll begin to carry the two of them along. All right. So we are already on the fourth episode on the beginner playlist, and this one is the third episode on the advanced playlist. Hopefully when we get to the fourth episode for this advanced playlist, then we begin to merge up the two of them. So that's more like this week will be for beginner and the next week will be for the advanced playlist. So this particular topic we are talking about right now, the only way you kind of understand it is when you already have a knowledge of the previous topics we've talked about, that is the market structure and the breakout structure. Okay, so if you've not seen those ones, I would advise you go back to them, except you have no issue with them and you just need this particular video for whatever reason. So let's get right into it. I'm going to be walking us through the definition of order flow, the rules of order flow, types of order flow, rule, because it's just one rule of order flow, types of order flow, and how to identify order flow, and finally the importance of order flow. All right, so I'm going to also try as much as I can to give illustrations and possibly chart examples so that you understand what I'm talking about. So let's start with the definition of order flow. I'm going to give you two definitions of order flows, and then we will connect the two definitions so that you will know that they relate to each other. They are literally saying the same thing and they are complementing each other in the same way. So first of all, what is order flow? Order flow is simply the direction in which the majority of market participants are buying or selling. I don't have to say that two times. If you did not hear it, replay this part. Okay. Let me say it again. Order flow is the direction in which the majority of market participants are buying or selling. That is the first definition. And the second definition of order flow is simply price movement on a particular direction or trend without interference, interruption, or disruption. These three things actually mean the same. Okay, I'll take it again. It is simply price movement in a particular direction or trend without interference or interruption or disruption. So, what did you understand by these two definitions? So you see that the two of them are actually talking about price moving in a direction or in a part of or in one side of the market. Okay, so based on the first definition, if the majority of the market participants are either buying or selling, what does that reflect on the chart or in the market? It simply shows that there is movement in one direction without interference. Eating how the two of them actually complemented each other. So for the market to move in a direction without any form of interruption or without any form of interference, it simply means that the majority of the market participants are on one side of the market. They are either buying or they are selling. I hope that was clear. So it's so simple. Order flow simply shows you who is currently in control of the market. Now it is either buyers or sellers. It's just as simple as that. It is either buyers or sellers. Simple. So it shows you the direction in which the majority of the market participants are buying or selling. Okay? It also shows you how the market is moving in one direction without any form of interference. And for this to happen, it simply means that the market participants are either buying or selling. They are on just one side of the market. So it shows you who is in control of the market. Now we have the rule of order flow. The rule of order flow simply states that if a disruption of an internal order flow occurs, price tends to use structures as liquidity. The rule of order flow states that if a disruption of an internal order flow occurs, price tends to use structures as liquidity. Now, you are not going to understand it except when we talk about the types of order flow, and then we'll revisit this particular rule to help you understand it. But I hope you have actually noted what the rule states. Okay, so we are going to talk about the types of order flow, and on talking about that, we will refer back to the rule of order flow because that is what will help you to understand the rule that we have just stated. So let's get to the types of order flow. But before that, let's go on a short break. Welcome back, guys. So we are going to be talking about the types of order flow, and we have two types of order flow. Okay, and in these two types of order flow, we have two forms of order flow. I don't know if that made sense in any way to you. Okay, the thing is that you can actually see them as four types of order flow, but no, because I believe that the other two are under the major types that we have. That is why I said we have just two types, and now right under those two types we have two other forms under it. Okay, so the major types of order flow is the bullish and bearish order flow. Okay, the bullish and bearish order flow. You already know what the bullish order flow looks like. When price is making higher highs and higher lows, what does that tell us? Oh, sorry, I've made a mistake now. Let's, okay, perfect. So when price is moving and making just higher highs and higher lows, what does that show us? It shows us that the buyers are in control. You can see this. Price making higher highs and higher lows. Okay, and in the same vein, if price is making lower highs and lower low, as you can see here, this thing is, I'm not going to draw it perfectly because I'm not an artist. All right, if price is doing lower highs and lower lows, that simply means a bearish order flow. And what does that tell you? It simply tells you that the sellers are right in control, and in this place the buyers are what? In control. It's just as simple as that. And when the buyers are in control, what does that tell you? It tells you to focus on buying opportunities. All right, and when the sellers are in control, it's simply telling you to focus on what? Selling opportunities. It's just as simple as that. Okay, now under the bullish and bearish order flow, we have two other forms of order flow. That is the internal order flow and the external order flow. Okay, we have internal and external order flow. If you paid attention to the previous class that we had, you will notice that we keep talking about internals and externals, major and minor. Okay, so but that's not what I'm not here to refer back to the previous class. Like I said, if you've not seen it, you just go back to it. Okay, so we have the internal and external order flow. Okay, the internal order flow, like we said before, is found in the lower time frame. Okay, where price moves in a particular trend or direction without any interruption. And the external order flow is actually found in the higher time frame, where price moves in a particular direction without any without any form of interference. Is that okay? That's it. So for the internal order flow, the two most recent break of structures has to be taken out before we say we have a disruption or interference of an order flow. And for the external order flow, only one most recent break of structure has to be taken out before it can be said to be an interference or a disruption of order flow. I don't know if you understood that. I don't need to explain this thing too much. That's why I said that if you have not seen the other class, then you have to see it so that you will even understand how an internal break of structure works and how an external break of structure equally works. So when we say something like this, when we say something like what we just said right now, for the internal, we said that 2 break of structures has to be taken out. In the lower time frame, we need to have the first break of structure. That is, for us to say there is an interference, we need to have the first break of structure, okay? And then the first break of structure, which is also known as the MSS, okay? The market structure shifts, or the CHOCH, that is the church. And we also need to see a confirmation of that particular, we need to see a confirmation. That is what an internal disruption looks like. Okay, this is what an internal disruption looks like. We've done something like this before. So in the internal order flow, what I'm trying to say here is that already we know that order flow is a movement of price in one direction without interference. And when there is suddenly an interference, it's simply for the internal order flow, price needs to, take out 2 levels before you can say there is a disruption. That means in the lower time frame, if price breaks the first structure like this, you cannot call it a disruption yet, because price might just break it and still continue in the same direction, and the order flow continues, right? However, price needs to take out the next level as a confirmation. That is, after the first market structure shift, we are going to have what? Another break of structure to confirm that, oh, that means price is about to change direction. And this is what we call what? A disruption. This is what we call an interference of order flow. I want to believe that this was clear. Okay? And when we talk about external order flow, I'm going to use this bearish structure to show us what an external order flow is talking about. The external order flow says that for there to be a disruption or interruption, price needs to take out just one level, okay? Either a low or high, depending on the direction of the market. So as price is doing lower highs and lower lows in a bearish trend, for there to be a disruption of order flow, price suddenly takes out a lower high, okay? And because it is an external, it is not going to start taking out 2 levels. This already is a disruption. This is already an interference of what? Order flow on the higher time frame. So on the higher time frame, price needs to take out only one level, whether you are in bearish or in bullish market. Price needs to take out just one level, okay, for you to say there is a disruption of order flow. And if it is on the lower time frame, price needs to take out what? 2 levels. That is a change of character and what? An extra break of structure for you to say that there is a disruption of what? Order flow. Okay, now taking us back to what the rule of order flow states. Taking us back to what the rule of order flow states, whatever it is, whatever it is you know the right English to be. Taking us back to it, it says that the rule of order flow states that if a disruption of an internal or external order flow occurs, price tends to use structures as liquidity. And what that implies is that just like in this level, you are seeing price move in actual same direction, and suddenly there is a disruption that occurs. Price will use structures as order flow. That means all the structures that it has created here, all these break of structures, price will begin to take all of them out and use them what? As liquidity. What that means is this: price will begin to take all of them out because there is now a disruption which has signaled a change in trend. Price will then begin to use it, okay? Price will begin to take out all of these levels until it finish taking it out, just like you can see me doing. Right? So you see, price took out this level, and also took out this level. Are you seeing? So when there is a disruption of order flow, whether it is internal or external, price will always use the previous structures that were created when price was going on one direction, price will now use them as what? Liquidity. That means it will now create new structures in the new direction of the market that will cancel out the one that it has already what? That the one that the structures that it has already created before. Some people call this what? Some people call this trend line liquidity. Some people call it transactional liquidity. Why? Because it is transacting with each other, okay, and it is canceling each other at the same time, okay, and that is just how simple it is. I want to believe that we've understood the types of order flow. So we are going to go into how to identify order flow, okay, but before that, let us take a short break and come back. All right, welcome back, guys. So we stopped at how to identify order flow. See, this teaching thing is not easy, honestly, or you just be shouting on top of your voice. You have a soft voice, eh? I will not be shouting because I need to be understood. I want the points to be well communicated. Anyway, how do we identify order flow? Okay, so like I said, we already said that order flow is simply price moving what in same direction without any interference, just as we can see here on the bullish order flow. Okay, so whenever you see price making higher highs and higher lows, that is simply a bullish order flow. And whenever you see price making lower lows or lower highs and lower lows, like we have here, I did not draw much. I did not do much lower highs and lower lows, but I believe that if you're already an advanced trader, you already know what that means. If not, you shouldn't even be on the advanced playlist. Okay, so I don't have to be doing too much. It needs to be easy for me. Leave the shouting part for the beginners playlist. Okay. Anyway, that's by the way. So when you see price making lower highs and lower lows, that is simply what? A bearish order flow. That is how you identify a bearish order flow. Now, back to what we also talked about. You also need to be able to identify when there is a break of structure or when there is a market structure shift. It helps you confirm whether the current order flow is continuing or changing. So whenever you see price giving just these higher highs and higher lows, that is giving only break of structures, already you know from the last class that break of structure simply continues price in the same direction. So provided there is continuous break of structures like this, that means price is still heading the same direction. And whenever there is a market structure shift, that is an interference, when price keeps moving and suddenly drops, gives a market structure shift, just as you can see here, there is already a disruption. So it will help you know that the market is already about to change direction. Is that clear? And now for the lower time frame, when there is a market structure shift, you need an extra break of structure to confirm that true there is a trend reversal. And for the higher time frame, you need just one break of structure, okay, one market structure shift for you to know that there is a possible trend reversal. I hope this was clear. I keep re-emphasizing this thing because it's something that needs to be understood. If you understand it, you have understood. Like if you understand it, you've understood it. So there are no two ways about it. So you see me, I'm still trying to keep re-emphasizing how to identify trend reversal on the lower time frame and on the higher time frame because they are different. You don't approach the lower time frame or you don't approach the higher time frame the same way you approach the lower time frame. If not, you will fail woefully. That is why I keep laying so much emphasis on it. Okay, so that is how you identify your order flow. You need to know when price has printed a break of structure and when it has printed a market structure shift. You need to know when there is a valid market structure shift and when there is an invalid one, and that helps you to confirm whether the current order flow is continuing or whether it is changing. So over to the next point, the importance of order flow. Order flow helps traders to trade with the trend of the market. It helps them to trade with the trend of the market. Okay, it helps them to know depending on the type of trader you are. In fact, let me add this in. Let me put it in. Your order flow can be different from my own order flow depending on the kind of trader that we are or I am. Okay, so your order flow is largely dependent on the type of trader that you are. Now, if you are a lower time frame trader, okay, you can be seeing a bearish order flow, and somebody that is a higher time frame trader on the same pair, for instance, XAUUSD, On the same pair, we are seeing two different kinds of what? Order flow. Why? It's because on the higher time frame, the order flow can actually be bullish, and on the lower time frame, the order flow is bearish. Is that clear? That is just it. So when you are trading with the trend, it depends on the type of trader you are, on the time frames that you work with. Okay, I see people trying to impose their understanding of order flow on another person. When they see somebody else buying, they be like, can't you see that the order flow is bearish? Go to the lower time frame. What if I'm a higher time frame trader? Are you getting the point? So for you to determine order flow, it is largely dependent on the kind of trader that you are and the time frame that you are operating with. So that is it. It helps traders to avoid trading against the market momentum, because another word for order flow is momentum. Yes, when price is moving on the same direction without any form of interference, it is also price moving with momentum. Anyway, momentum can actually also be said to be the volume at which that particular move is happening. All right, because when there is a bullish order flow or bearish order flow, for you to know the strength of that price movement, that is also another way to identify momentum. And that is actually the actual meaning of momentum, the strength. Because we can be in a trending market, whether bullish or bearish, and the market will not be moving very fast. It will just be, moving slow. And now there are some people that wait before they even think of trading anything. They need to wait and see that the market is moving with so much momentum, okay, before they will even follow up. And there are some people that they need to see that momentum before they will make any decision in the market. So another importance of order flow is that it helps to improve entry and exit decisions. It helps you to know when to get in and get out of the market. It increases the probability of successful trades. So when you know what the order flow is saying, depending on whatever time frame you're working with, when you know what the order flow is saying, it helps to increase the probability of your successful trade. So you need to understand direction of the market. That is the directional bias of any market you are trading. Okay, you need to understand it, because that's the only way you don't trade against that particular trend. They always say the trend is your friend. That's a basic word they say for beginners, right? The trend is your friend. So the order flow is your friend. That's just the same thing. When they say the trend is your friend, it also implies that the order flow is your friend. So I don't know. I think I need to show. Do I need to show a chart example for this? I don't need to see this gold. I don't know what it has been doing. It has been confusing us since, whether it wants to buy or it wants to sell. Now only God knows what it wants to do. I don't know. I don't know what it is doing. I promise you. So you can see that in this particular time frame, we can call this a bearish order flow. Okay, I just want to quickly show a chart example. We can call this what? A bearish order flow. On the higher time frame, this is the 4-hour time frame actually. So you can see that price is moving in lower highs and lower lows, lower highs and lower lows. It's creating lower. So you can see that the sellers have been dominating until there was a disruption of order flow. And like I said, if we are on the higher time frame, the disruption of order flow needs to take out just one lower high, because we are on the bearish market. It needs to take out one lower high. If we are on the bullish market, it needs to take out only one higher high. Okay, for you to know that there is a disruption of order flow. So price kept moving in lower highs and lower lows until it came to this very level and it took out this particular high, which it was not supposed to take. It's also possible that it has taken it out, but it wants to it continue in the same bearish trend, and that is what I am gradually seeing in this particular movement. Normally, when there is a disruption like this, it simply means that the price wants to change direction from bearish to bullish. And when it changes direction, like we said in the rule of order flow, price will now tend to use the whole of these levels, all these structures that it has created here. Price will use them all as liquidity. Price will cancel out all of them. The moment this bullish trend is established and we are sure that the market wants to go bullish, it is going to cancel out everything that it has created while the market was bearish, while there was a bearish order flow. So here because there's a disruption of order flow already, we are supposed to continue price to the upside. But this is gold. Gold works with sentiment. If it is another pair, I could say for sure, but you see, I was able to catch this level here. Price respected it. So normally it's supposed to keep going, but it keeps coming back. It already respected the second level, but now it is acting like it wants to take it out. So it's very possible that we are going to even see more breaks, and that is where fake breakouts comes in, but we are not there yet, because there's something called fake breakout. Price can actually behave as if it has, broken out. It wants to change direction. It will give you a market structure shift, very clear one, and then it will still go back and continue in the same direction. Okay, and that's why you are not the market maker. Anything can happen, but you only work with what you know, respect what you know, follow your plan, and protect your capital. That's just how simple it is. So this, what I have just said here, is simply applicable to what? The bullish structure. If there's a bullish structure, what I have said in this bearish one is just very much applicable to it. Okay, so if you're an advanced trader already and you're on the advanced playlist, I'm sure you should know how to apply knowledge to different things. Okay, so the key takeaways from this particular class is that order flow shows you who controls what? The market. The bullish order flow simply communicating that the buyers are what? In control. The bearish order flow simply saying that sellers are in control. Now, it also trying to tell you, this particular class is trying to make you know that you are supposed to always trade in the direction of the dominant order flow whenever possible. Whenever you see the room to trade with the current order flow, just make use of it. Okay, use the break of structure, your knowledge of break of structure and market structure shift to confirm continuation or a potential shift in what? Order flows. Okay, and even when you apply the knowledge and price decides to do what it wants to do, just like it is misbehaving around this area, well, it is not your fault. You have done what you know. It doesn't mean that what you know does not work. It simply means that the market will always do its thing because it has a mind of its own. Your job is to control your own self and handle the ones that are within your control and leave the ones that are not within your control. As you can see here, you see that I've already managed in fact, I'm not even on this trade anymore. I'm just watching to see what will happen. So I've protected my capital against the 2 entries. All right, so that is it. That is it for this class. So don't ask where the market might go. First, ask who is currently in control. That is what order flow tells you. Okay, that is what order flow tells you. Do not ask where the market might go. Don't predict it. You don't predict. You react in the market. You are going to always be a reactive trader. Okay, once we establish that this thing now is going to continue very strength, yes member will follow up. Okay, so don't ask where the market might go. Ask who is in control, and that is exactly what this particular class is talking about. All right, guys, I think this should be the end of this particular class. You followed up to this point, that means you're a serious trader, and I hope that things work out for you and I. Okay, all right, so please, the only way you can support me is to subscribe to my channel, like, comment, and also share with your friend. Don't forget to turn on post notifications so you'll be the first to be receiving my educative videos and even my motivation videos that I'm about to start off, because I have a lot of values to share this time around. Okay, guys, so all right, guys, thank you so much, and I'll see you on the next one. Bye.